thank you guys for joining us. We're going to have just a nice little roundtable discussion, have some fun up here, and then hopefully we'll leave some time at the end to have some Q&A for anyone that has any questions. But what I want to do is just introduce our panelists and let them give you a quick overview of what they do, who they are, and a little elevator pitch. So we're going to go first. Let's just talk about the topic, because the topic is a little vague. The path to wealth. Yeah, who doesn't want to be on that? But solutions for growth and security. And what we want to focus is we have three different aspects of industry up here. And the one thing that we all can agree on is the way we run our businesses, the way we want to protect investors, and the way we want to educate them. So let me start with Brian here. Brian Daly, CEO of Ground Floor. Welcome, and tell the audience a little bit about yourself and the company.
Good to be with you guys. Thanks for showing up to the panel. We are the, I guess, earliest entrant and largest issuer of fractionalized first lien real estate investment debt. It's a high yield product that allows you to participate in real estate investment loans with as little as $1. And now we're fractionalizing that. You know, sort of what happened in the public markets where you used to have to buy in round lots of 100 shares, and now you can buy a penny of pretty much any stock you want. The same thing is happening in alternatives. We serve almost 300,000 retail investors. We've done about $1.7 billion in volume on the platform. And the yields these days are sitting at about 12.5% in this kind of high yield product that I'm sure we'll get around talking about the real estate market and why that's a good thing.
All right, excellent. And our second speaker, Dan Raju, CEO of Tradier. Tell us a little bit about yourself and Tradier and what you guys are up to.
Yeah, thanks for having me here. I'm really enjoying it. I've been to this event many times before, so thank you so much for listening to me again, I guess. But you know, Tradier, we are one of the larger options brokers in the country. You know, we built up the business on a very simple concept. Kind of wanted to be different than other brokers. Thought that, you know, if you truly give people good choice, good content, and transparent pricing, and don't engage in hyperbole in any big way, and keep the concept simple, you'll attract serious investors. So that was the concept we built the firm under, and we use technology to enable interaction with that. We were the first guys to build API and offer that as a platform. So today we do about more than 2% of the U.S. retail options market comes from us today. It's based on a very simple concept: is do one thing right and do the same thing right every time, and we have attracted us, and we are kind of happy that we have actually so many of our partners here. So I'm so glad that we were able to provide that service, and we work very hard every day, try to do what we think we do better every day. So thank you so much, and that's what Tradier does. It's a brokerage purely meant for the active trader, both equities. Options is a big play of ours, and futures now more recently.
Okay, excellent. And that's right after what I like to trade myself. And our last speaker is also an author who has a book that comes out today. Michael Turpin, founder and CEO of Transform Group. Welcome, and tell us a little bit what you're working on, and we got to hear about the book as well.
Sure, thank you. So it's called Bitcoin Supercycle. It's out today. You can get it on Amazon and other places. And it's published by Skyhorse Publishing and distributed by Simon & Schuster. And I actually chose it to come out this time of year because what most traditional investors don't understand about Bitcoin is that it has cycles that are just as predictable, if not more so, than the stock market and real estate. And so I knew that we were going to hit an all-time high roughly in November, and that's why I published the book. There's something I call the 4 seasons of Bitcoin inside of the book, where Bitcoin spring is when the halving comes out, starts a new cycle. Bitcoin summer is the day, and this has happened every cycle, the day you pass the all-time high for the prior cycle. Last cycle was 73,000 and change. You go off like a rocket ship. It happened to $30, happened to $1,200, happened to $19,000, and it's happening right now.
Fascinating. So as you can see, we do have a diverse panel, but we want to bring it together. You know, we have real estate investment, options, equities, and crypto. So something near and dear to our heart, and for a diversified portfolio, we got the diversified panel. So I'm going to stay with Bitcoin And I'm going to put the spotlight on you, Michael. And if you need water, guys, it is 2,000 degrees up here on this stage. We have water behind us, so just yell before you pass out. We want to talk about some of the challenges we face. And nothing has been more exciting over the last few weeks than the crypto market. But what are some of the challenges you see coming forward? And some could be very good tailwinds for the crypto space. And how do you and your team help investors overcome some of the challenges, and what are the strategies and technologies that you use or guide them to help them navigate some of the pitfalls that you may come across?
Sure. So there's never been a better time to invest in Bitcoin in terms of safety and security. Right now, we're up 130% for this last year and 600% for the last 2 years. I'll compare that with anybody else on the panel. And obviously crazy numbers if you go back a few years earlier. Again, the cycles is something that's confused the media. They love headlines, and so whenever it goes down, it's like everybody bought at the top and just lost at the bottom. And retail, unfortunately, has had a tendency to do that. They panic sell near the top, and then they panic buy near the top, and then they panic sell once it starts going down. These are predictable cycles. The last 2 cycles, the crash for each cycle happened almost to the day a year after the top. So you can go and look at these cycles, which I explain in my book. In terms of helping investors, the book is a good place if you want to DIY. I'm also a partner in the Alpha Transform Holdings hedge fund, which is Alpha Liquid Fund, and a couple other funds, so I can talk about that. Again, there's a lot of opportunities in other parts of crypto, but the safest one is Bitcoin. I've had an allocation of about 50%, and I regret having it that low. Given to my friends who were 110%, and like Michael Saylor. So
excellent. And Dan, you have 280,000 users on your platform? Yeah, it's impressive. And 2.8% of all the options volume trades through Tradier. I'm bragging for him. We talked about this before. But one of the things when you talk equities options, it's a little faster. And there are a lot of educational tools out there. But what are you doing to educate your investor and to help them navigate some of the pitfalls, because a lot of people that trade aggressively blow up. What are the things that you do at Tradier to help that?
No, so the key transactional businesses like ours generally have a higher percentage of people can't help themselves but screw up. So I think what we have tried to do is we're tried in general to be very, very responsible. And the key to responsibility is content. And I say this because we have our own television or live show channel where we partner with CBOE and we partner with MAIX and some of the larger exchanges. We spend a lot of time, energy, and most importantly, content is not cheap, to educate people, right? On educating people on how to basically go ahead and understand what they're really doing. I think if you drive a good amount of education, most importantly, understanding of the product, I think the upper section of the people, and you can make that section larger and larger, actually can accumulate wealth in that section. So we have taken a much more what we call as a responsible approach to and spend the time and money to actually educate people on that. So and in addition to education, the key is to have the product be understood as something that is simple and easy for them to scale up to. So the 2 aspects of really driving responsibility is to be responsible on the pricing and be extremely responsible on the content. I think both of that actually over time, trust me, mark my words, anybody who's trying to get into content marketing, I'll tell you one thing, you have to stay in it for long. It's not like you're going to see results in the first 4 months. You got to stay it for long. You don't understand how much value your 5 views on YouTube gets you. Don't underestimate the value of those 5 views or 10 views, and don't be lost in subscriber battles. So putting all those battles aside, if you put good content out there that is responsible, I think people subscribe to that responsibility, and you should do everything to service them better. I think it creates a level of what we call maturity in the customer. And you end up getting a better customer too at the same time.
All right, I'm going to come back and pick on you with that. 0 day to expiry doesn't sound like a long-term investor to me. We'll come back to that topic at the end. and Brian, you're more in the real estate game, and I like how you can fractionalize that. I'd like to hear a little bit more about the fractionalization and how you teach your investors that this is a longer-term play. So what are some of the hurdles, some of the pushback you get from people that are a little hesitant to jump in on the real estate side of things?
I mean, look, we started the company in 2013 in the wake of the 2012 Jobs Act with the insight that the next great mass market investment product after Bitcoin would be something in the alternative space. And we were early to that. We picked real estate because it's tangible. We picked residential real estate because it's familiar. And we ended up with a product that fills a white space in most people's portfolios, which is a very short-term debt holding with low volatility. And because it's short-term and high yield, we can adjust the yields as rates have moved. And that's turned out to be a very handy thing in this environment. When you're investing in alternatives, there are two big risks. One is concentration, and they're related. One is concentration, and the other is liquidity. So the product that we've commercialized and scaled now to about 1.7 billion, which I think makes us by far the largest fractionalized platform in real estate, or I think in any other space. The way we've solved that problem is fractionalization allows you to invest in the same way that a hedge fund or a private equity fund would invest in this category, which is in a diversified manner to build your own portfolio. You can, kind of like in options trading, you can sort of build your own strategy. Sort of like in Bitcoin, you can sort of, as I do, dollar cost average every day. You can invest across vintages on ground floor. And you can do that critically without allocating $25,000 to some stupidly concentrated commercial real estate crowdfunding deal, which is where a lot of people have ended up getting stuck and burned and losing a lot of capital, or getting stuck in some REIT, even if it's from Starwood or Blackstone or a name brand or Apollo, that ultimately is going to lock up your capital. So we're using technology and regulation to solve those problems, and I think that's why the product has taken off in the mass market.
All right, and I'm going to go back to you, Dan, with this next question, and then to Michael. We all know the pandemic really sped up and brought a whole new wave of investors to the market. We saw it in crypto. We saw it, I got to keep the microphone here and I'll point with this hand. We saw it in the crypto equity option space and even in the real estate space. There were a lot of great opportunities there. We touched on this a little bit, education for the long term. What are the tools on your platform? What educational things do you see that people tend to, gravitate towards, and then some of the things you try to educate them with? Because it's like talking to your kids. Like, they don't want to hear you give them advice, but if someone they respect your age gives them advice, then they'll listen to them. Are the users on your platform using the tools available, and what tools do you feel are the best to educate those investors? And Dan, right back to you.
No, I think the pandemic was an interesting time. I think it created a very interesting, what I call a situation in the market. What it did is, while at the time it actually brought in a lot of customers to the market, it actually created a hyper-attensive environment where there was a rapid graduation effect in the market, in the sense that people were basically, what would take an equity customer years to get into options, they were getting there on day two. So I think it was an interesting thing that basically happened is, there was rapid graduation, just not graduation at number one. And at the same time, what has happened is, and you brought up the issue of zero DTs, and I call it as a byproduct of is mostly directional and short-term momentum trading, that habits get crept into the options market. As a result of it creates short-term expiration or short-term behavior. But I think the way we tried our best to navigate, the way we tried best, I'm sure there are probably better ways to do it, but I think the way we tried to navigate is, number one is we insisted quite a bit on service, because when they go to an app that provides zero commission and they say, oh, this is horrible, or whatever it is, and they try to move on to a slightly more, if not cost-wise, but from premium service, there is an expectation of reliance. So we kind of beefed up our customer service, gotten a lot of people who basically help them trade and educate them at the same time, ramped up our content business. And we also introduced to the platforms that we use. We are a unique business. Our business, almost 70% of the volume comes from third-party applications connected through our API. So we were able to work with the ecosystem and force education in every such step of the way to drive that effect. So that's how we kind of compensated what we believe is almost like, I mean, to just give you some perspective, pre-pandemic, I think Matt Cashman will give you better numbers than I can. But I think, when we were looking at retail, it was like 8 to 10% of the US total volume. We do about 42 to 54 million contracts per day, and about 8% of that was retail. I think post-pandemic, I mean, right now we are like 40%, right? So such a massive improvement. And what's even more interesting is there are more single stock options trades than the number of shares traded in the market. So when you have that kind of hyperbole growth, I think we tried our best to basically be a responsible partner. It helped us while it helped us to basically go ahead and slow the market down, but we ended up with a better way to service a smaller chunk of people, and a lot of brokers that got tens and millions of accounts in that process. We did not do that, but at the end of the day, once the hype died down, we are still left with those customers in a major way. So
Gotcha. Now, Michael, with crypto, tends to be extremely volatile. If you haven't noticed, we trade 24/7. So middle of Saturday night, you could get an alert that we're seeing some significant moves. Now, I know you are more on the long-term side, but what do you say to those active participants to try to get them to see the bigger picture and to safeguard them where they're not just in and out constantly all day long?
Yeah, unless you want to have that as your career, being a algorithmic trader or whatever in crypto, you can still make a lot of money just using my system, which is, first of all, hodling, as they call it, has done very well over the years. If you bought 1,000 Bitcoin at the end of 2012 in the first halving, you would have paid $12,700, and today that 1,000 Bitcoin is worth $92 million. On the other hand, if you followed my system and my safest system, there's a couple of different options in the book. And you buy once near the high. You're not going to pick the exact high, and you then you sell near the high, and then you buy back a year later near the low. And I've got it within like 30%, right? And the highs have always been remarkably within a 37-day period. And so you can start looking to see, and you can dollar cost average, near the high and near the low. I wouldn't dollar cost average on the way down the third year, but you would have, for your $12,000 investment, instead of $92 million, you'd have a little over $5 billion, because you would have 64,000 Bitcoin at 92,000 apiece. So that's really and I think this year, every cycle you've seen less volatility. The first pre-halving cycle, you had 3,000x from the first purchase to the high, and then a 97% drop. The second cycle was 100 times profit, and then an 85% drop. The third cycle was 30x, and then an 83% drop. This last time was only a 75% drop after going up only 8x from the halving. This time I project we're going to be around 3 to 4 times, because the difference is the macro, which is going in our direction. And then the drop should only be about like 2/3, but it will be a drop. If you sell at 200,000, you can expect to get things back under 100, probably around 70 or 80 when the crash happens.
And when people think volatility, they don't think real estate too often, but we've lived through cycles where we've seen some extreme volatility. We've had a great run. Mortgage rates are high, but home prices are continuing to be elevated. I'll throw it to you. When I'm sure you discuss this frequently around the water cooler, what are the things you tell your investors about the potential volatility of the real estate market?
First of all, for most of us as individual investors, we're unaccustomed to buying credit, right? When we think of investing, we're thinking of investing in equity, whether that's startup equity or equity in via derivatives and options, stocks. Most people are unaccustomed to building a portfolio of credit. So the first thing we have to do is teach people why that's valuable. And in the pandemic, that became very obvious, right? The loans that we originate to real estate investors are typically 12-month term. That means we get to reset rates continuously. So when we see rates increasing, we can bump them up on the platform. I think before the pandemic, they were sitting at about 10% as a contract rate. and today they're at about 12.5, right? So as the prevailing rate environment increased, we increased rates, so investors earned higher returns. What we were surprised by is how loss ratios didn't increase, and that's because house prices have held up very, very well because of the dynamics of supply and demand. So educating people about how to be a credit investor, like educating people about being an options investor or being a Bitcoin investor, there's work there. And the best way that we find for people to learn is by using tools. I think there's a lot of opportunity for content marketing. We were talking about this earlier today. Right. There's a big opportunity in content marketing to teach people about being a credit investor. But there's nothing like showing how it works. Our most recent product leverages what we've learned over the last 10 years. It's called the Flywheel Portfolio. And it allows you to have about probably 10 to 20 times the amount of diversification with the same amount of money, and to generate a flywheel of cash returns that you can reinvest or not. That's, because it's so highly diversified, you can dial in and predict the yield pretty well. So for me as an investor, when I'm investing in Bitcoin or options, I look at this as the other end of the barbell. This is the reliable income and yield that allows me to go out on the risk curve and invest in, as most people want to do, invest in more esoteric, higher volatility, larger, outcomes, out there that could be the 10x, 100x outcome on a leverage trade. And I think that we're seeing a lot of that behavior. Yep.
Okay, and we're going to go one last question because the panel before us went a little long, so we're going to speed things up and get us back on time. But Michael, and I'll ask this to all three of you, what trends do you see to grow, the crypto space in your case? What are the trends you see accelerating? Do you see consolidation within the space, introduction of new coins? What do you think the next big things in your space are going to be? And your space is interesting because you have an administration that looks like they're going to really be a nice tailwind at your back.
Yeah, I was going to say number one trend right now is the Trump trade, right? The Trump election. I mean, you saw that we broke the all-time high, which I projected was going to happen if Trump won, the day of the election, as soon as it became obvious, and it shot up 25%. It's pretty much been holding in the low 90s. I project we'll be at 100,000 by the end of the year. I said that earlier. We could be by the end of Thanksgiving weekend at this rate. I think institutional comfort, now that the volatility is lower and the ETFs were a game changer, for the very first time ever, we ended up having a new all-time high for a cycle that happened after the capitulation. Some people got confused and said, oh, that means there's going to be a shorter cycle. No, you can't have the all-time high of this cycle happen before the happening. That was the all-time high of last cycle. And, talking about real estate, I've taken advantage of that a few times to sell my Bitcoin when I'm trying to hold on, to buy it lower, and parked it in some real estate. I bought the Mike Tyson mansion from The Hangover where he had his tigers with $70,000 Bitcoin earlier this year. I bought my Miami penthouse with 60,000 Bitcoin in 2021. The main thing is to make sure you have enough cash when it crashes so you can buy back in. This last time at 15,000. Yeah. So we are already now, because I heard on the last panel them talking about, when digital assets are going to be something you can put not millions or tens of millions, but billions of dollars to work. That's already happening. The ETFs this past couple of weeks, we're going around $1 billion a day. They are now larger in their first year than the gold ETFs. So it's only a matter of time until we're larger than gold overall as an asset class. That makes $700,000 Bitcoin.
All right, I guess I can't brag that I bought a large Starbucks with my crypto winnings there. Unfortunately, I haven't been YOLO'd in. I'm very diversified. But let's go back to you, Dan. In the equity space, you guys have grown at a reasonable pace. How do you continue that growth? Where do you see the trends going forward?
No, I mean, thinking what Michael just said, 2025 is going to be interesting because I really think the regulatory environment will be forced to become a little bit clearer about its policy on crypto. I mean, we announced the launch of crypto mini about a year ago, and I put it on hold because the regulators basically told us to stay on hold. That's how simple. I think 2025 will be interesting from the regulatory aspect of crypto. I think that will be very interesting.
Perfect storm.
Right. I think it'll be interesting. But generally speaking, what I see in the market right now, number one, which I based on data that we see, automation is very important. I certainly not placing a limit order or writing an algorithmic code, but something in between where people are going to use small automations to automate their trading habits. We see a tremendous growth in that. We ourselves have seen almost a 30% on micro automation of trades. I think that's going to be very, very huge area of growth. The second thing I see is all of us talk about the US markets as though all the people who hold the assets are all Americans or citizens of this country. I see a huge internationalization of the US investing market. There's a lot of money coming in outside. Now, what's interesting to watch is the geopolitical and that kind of pressure impact it has on local policies is going to be impacted by what happens outside the country. So two areas that I see tremendously that's happening. So I hope the regulatory environments get better, and those are the areas that I see are growing this year.
Right. And Brian, to you, the growth and the trajectory, what do you see being the catalyst, and do you see the sector starting to really pick up speed as we head into this, we're in a bull market, so I think it continues. You?
I do. I love a good secular trend. The younger you are, the more likely it is that you are allocating relatively more of your portfolio over time into alternatives. The younger you are, the more earning potential you have over time. And so the market is moving in the direction of alternatives generally stated. The question is, which alternatives? I think real estate is by far the best alternative for most people. It's the one that most people recognize. It'll be the first to benefit from that trend. I think real estate debt has unique attributes to it in this type of environment that are going to be appealing to investors who perceive equities as overvalued or who are waiting for the next leg down of the Bitcoin super cycle, because you want cash flowing, low volatility alternatives to complement a lot of this volatility and opportunity in the market. I don't think the 25-year-old high income, not rich yet investor is going to go lock up the lion's share of his allocation alternatives in some private credit fund. Why the hell would you do that? Why would you pay the fees? Why would you take the lockup? Why would you give up control? No, they're going to invest in a better mousetrap to do that. And that's I think, what's going to benefit us most over this next cycle.
Excellent. Well, I want to thank you. In the interest of time, we're going to move it to the next panel, but if you guys are going to be around hanging out, we have a book to promote as well, so please come up and talk to our speakers with any questions.
And also a conference for those who want to learn more. Puerto Rico Blockchain Week is the second week of December. We got a lot of speakers, including on tokenized real estate. It's tokenizedconference.com in San Juan, my hometown.
All right. Do you have any social handles you want to give to the audience?
I'm my name, at Michael Turpin. I do a weekly podcast called Not Financial Advice.
Okay, Dan?
All our handles are Tradier, so in any social platform you go to Tradier, you'll get it.
Gotcha.
And you can follow us on social at Ground Floor, typically groundfloor.com website, or me at Brian_Daly on Twitter.
There you go. Well, thank you very much for your time, and hopefully we can chat outside a little where it's a little cooler. It's very warm up here.
Thank you.
Thank you.
Thanks.